Hi everyone. Today I want to talk about the Fundrise updates. Fundrise updated their portfolio options and their expected returns. So let's talk about what that means for you. They also announced progress on one of their most recent projects, and we'll cover that as well. If you're interested in this beautiful lakeside property at Big Bear Lake, go ahead and like and subscribe. It is 7 beds and 8 baths. 9,140 square feet. It is a log cabin build. It has its own private beach, a massive bar and dining space, a 5-car garage, a wall-mounted kayak. It looks like a log cabin version of Tony Stark's house from the back. Exceptional views and wonderful sunsets. Keep your dreams at the front of your mind. Like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. All right, let's talk about the updates to Fundrise. So they've announced that they are up to $4.9 billion in real estate investments. It's quite a bit for a company that was just started in 2014. So 6 years later, they've acquired almost $5 billion in assets. Definitely quick growth. Scrolling down here, you can see their annualized returns. I did show this in my last video, but it's a good reminder that they average around 10% annually, and that is after fees. Here's the really important part that changed. They upped their dividend for the supplemental income plan pretty significantly. It used to be 0.9%, and they upped it by almost 3%, which is a very substantial dividend. It shows here public bonds at Vanguard yield 2.23% right now. Vanguard Real Estate offers 3.11%, and Fundrise Supplemental Income Plan is now offering 3.72%, which is a very substantial dividend income. So for all you dividend investors out there who are looking for cash flow investments, this is a very good option. If you choose to invest with them, it is semi-illiquid for the first 5 years. That means that you need to put in a request to withdraw your money. They need to approve your request, and then in the future, you will be able to withdraw your money in a specific window. And if it's before the 5-year mark, you will be penalized a percentage based on the number of years you're invested. I covered all of that information in my previous Fundrise video, which I will link in the description. Moving on to the core plans. This is the $1,000 minimum for investment. Supplemental income is focused on dividends. Balanced investing is a split between dividends and appreciation. And then long-term growth is more focused on appreciation and the least focused on dividends. They quickly go over portfolio expectations. Long-term growth is going to have the highest returns, and supplemental income will have the lowest returns. And then it talks about exactly how these portfolios are broken down. So supplemental is most focused on debt, which is how it generates such a high cash flow. The balanced portfolio is split between debt and equity, and then the highest portfolio is almost completely equity. Then you can see total returns here. So supplemental income, as I mentioned, has the highest dividends, and it's split almost 50-50 between appreciation and dividends. The balanced portfolio, these dividends are on par with what you would see on the equities market. If you were to invest in dividend-paying stocks, it's somewhere around 2 to 2.5% right now on average. And then appreciation is 6.8% to 8.7%. And then moving over to the long-term growth plan, it says 0% dividends. But if you're on the long-term growth plus plan, which I will show later, you can receive some dividends. And then appreciation is 9.3 to 12.8%. which is the same as the total return since there's no dividends. To give you a visual on what that growth looks like over the course of 20 years, a $10,000 investment would grow to $48,780. A balanced investment would grow to $67,848. And then the long-term growth portfolio would grow to $81,863 over the course of 20 years. This table here shows the difference between the different accounts. Starter level is 5 to 10 projects, core level is 40 to 80 projects, and then the advanced level is 80 plus projects. And I will show that my account has over 80 projects. Taking a look at their most recent update, shows the Dallas area apartment building that they've been renovating has been completed. You can see here what the units look like. Then a little bit of a description. It's a 490 unit apartment complex. And the improvements that they did are estimated to have increased the rent by 20% or $145 per month per unit. The effects of the virus on this investment says rent delinquencies increased by about 2%, which is generally on par with the rest of the Dallas-Fort Worth area. 2% doesn't seem like a lot to me. It seems like this investment hasn't been hugely affected, and that's good to see as an investor. And then it goes on to say how this matters to you. It says this is an equity investment, so as an equity investor, you will receive some of the rental income in quarterly dividends, depending on the percentage of this specific property that you own. So here is my account. You can see I just crossed the $23,000 threshold. I have deposited about $500 since the last video I made on Fundrise. It says here I still need to invest more to stay on track with my goal. And then you can click here and it'll show your historical deposits as well as equity growth. But the main thing here is my portfolio. It shows that I'm currently 15% debt and 85% equity. And that is because I'm in the long-term growth plan. Shows here I'm in the long-term growth plan plus, and my account level is advanced. So that's the 10,000 plus account. And it allows me to have above 80 investments. So with 167 projects, you can see all of the different projects identified here. And if you're curious to what's going on with these projects, you can click over here and then you can scroll down. It'll show the most recent update, which is the one that I covered in the Dallas-Fort Worth area. You can see that they are still working. Construction going on in Denver, plans filed for a new apartment building in LA, and a stabilized DC commercial property. And that's all since April 21st. So April 21st, April 23rd for this one, May 13th, and then the most current one, May 21st. So this tells me that Fundrise is still using my money effectively. They're still working, and that these properties are going to generate income now and into the future, which is exactly what I want to see as an investor. Also, I wanted to highlight my dividends. So I received $101 for my first quarter dividend. If you're doing the math along with me, you can see here, this is my positions. And my total position as of right now is $18,320. So for first quarter, I'm using $17,500 for my cost basis. So if I were to expand that rate out to a full year's worth of dividends, it would give me a 2.3% dividend, which is pretty good. That's what I could expect anywhere in the stock market at this point. And the idea here is that my equity growth is going to outpace that pretty significantly over the next 5 to 20 years. If you do choose to invest with Fundrise, make sure you use my link in the description to get your advisory fees waived for the first 90 days. Of course, this is all for entertainment value. This is not financial advice. Please consult your financial advisor before making any decisions. Go ahead and like and subscribe. Comment down below what you think about Fundrise. And with that, let's get to today's jelly. So today's jelly is a clip from Letterkenny. And if you've been watching any of the episodes before this, you would know that I like things with humor. So this show is definitely one of the funniest shows to me, and it requires a lot of context. So this clip is two hockey players that have been training all off season to try to get better for the upcoming season. And they're talking about winning championships. So they're shortening championships to ships, which quickly becomes boats. So here's what that looks like.
So many off-season reps, buddy. So many preseason reps, buddy. Said no to the juice. It's fucking baseball, buddy. We dug deep. Bear down. Time to show the boys some gains. Coach is gonna flip when he sees these gains. Gain Gretzky, Gain the Rock Johnson, Shania Gain, Gains train.
You guys want to go back out and try that again? Maybe it's the lighting in here, but I'm not seeing any gains.
What?
Doesn't matter. Team folded.
Why?
It's not enough bodies.
Why?
Because it's Senior A whale shit hockey. But option number C, join a championship team right here in Letterkenny. As coaches. With me.
Never won a shit, buddy.
On track to win back-to-back-to-back boats.
Love to win a boat, buddy.
And come on, let's win a fucking sea liner.
Let's win a Great Lakes freighter. Let's win a cable ferry.
Let's win a cabin cruiser.
Let's win a Boston whaler. Let's win a recreational trawler.
Let's win a paddle steamer.
Let's win a pleasure barge. Let's win an outrigger.
Let's win a freshwater vessel.
Let's win a naval drifter.
Let's win a water rambo. Let's win a landing craft.
Let's win a saltwater logger. Let's win a sea tugger.
Let's win a luxury fucking yacht. Let's go.
As you can see, Letterkenny is a very silly style of humor, but I like all styles of humor, and I like that they're pretty clever. Just the idea of naming championships ships and then converting that to boats and then naming all kinds of boats in its place is just a clever kind of humor. And that's really pretty representative of the show as a whole. And with that, make sure you like and subscribe so you don't miss any future episodes, and have a great day.